Who would have thought that in 2020 GameStop would go up over 1,000%? Who was even keeping track of GameStop before 2020? It seems like every single retailer is dying, and yet in 2020 GameStop has gone up over 1,000%, and it looks like it could go up a hell of a lot further. Now GameStop's a really interesting case because there's a lot of factors we've gone into this. From new board directors, revenue sharing agreements, a short squeeze, the adoration of Wallstreet bets, it's all come together to create a perfect storm. And in this video, we're going to take a look at GameStop, why its value has increased, if I see it increasing further, and what could possibly happen. Take a look at this. You can see on this graph of GameStop that it went down pretty much consistently for every single year until 2020. 2016, 2017, 2018, 2019, and in 2020 it stayed pretty stable until July, September time, where it started to rise up, and then in 2021 it's gone absolutely hyperbolic. And the craziest thing, if all goes to plan, it will be worth a hell of a lot more. Now this isn't my plan, this is Wallstreet Bet's plan. They've been planning a short squeeze. Now for those who are unfamiliar, a short squeeze is when you put so much upwards buy pressure on a stock that those who are shorting it lose so much money that they have to hedge their positions by buying stock themselves. And when this happens, if there's a shortage of stock because there's so many shorters trying to hedge, it can cause the stock price to absolutely rocket. This isn't the first time a short squeeze has occurred. Check out the Volkswagen short squeeze. I'll actually put a graph on the video because it's actually amazing to look at. So what happened is that on October the 28th, Volkswagen became the biggest company by market cap due to the short squeeze. The shares rocketed after there was an overshorting of shares which were impossible to cover. And this happened because Porsche was buying up Volkswagen. So there weren't a lot of shares on the market, lots of people were shorting it, Porsche started buying them up, and this meant there were no shares available. Now generally, if the market moves against a shorter, they'll buy shares to hedge their position, but because all the shares were being bought, the share price started to rocket. There were no shares available for them to hedge. And this is exactly what people are planning to do with GameStop at the moment. Now, if it will work, I don't know. It's really very hard to say. These infinity shorts are very rare, and the markets and big institutions are always trying to create liquidity to prevent one. But if it does work, the holders could get over 200% gains overnight. So if you are looking for a very high risk, high reward play, give it a look. And if you want to talk to the people who are planning this out, go and look at Wallstreet Bets. There are tons of threads about people trying to do this short squeeze, trying to get those huge returns. Now GameStop is by far and large the world's largest gaming retailer. But over the last few years, they've struggled to get it together in the online world. And this is where one of the most important factors of 2020 happened. So GameStop actually jumped 17% when Ryan Cohen and two of his associates were announced to join the board of directors for GameStop. Now for those who don't know, Ryan Cohen was the founder of Chewy. Chewy was an online pet store that he brought from nothing up to a multi-billion-dollar valuation. So he's really savvy in the online world. When he joined the board, it was hoped that he would be able to transfer the company strategically from a retail-based company to an online one. And he sort of had this vision that he's going to cut costs, expand its online offerings, and really bring it into the 21st, 22nd century. Even before Cohen joined the board of directors, his company owned about a 13% stake in GameStop. He always thought it was undervalued and had a lot of potential. But now that he had joined, it was hoped that he would be able to strategically transform the company from this retail, big cost company to a far more streamlined online presence. And not only that, he'd be able to expand the services to bring in more revenue, bring up that profit line. His plan is to transform GameStop into a much larger Chewy, the dominant online player. And it does seem possible. He has the experience, the market reacted well, and there does seem to be a shift to these more niche sites that can give you a more exclusive experience rather than the overall dominant Amazon does everything. Now, one of the other factors that changed in 2020 was a new type of contract agreement with Microsoft. See, Microsoft and GameStop entered into a multi-year agreement that gave the video game retailer GameStop a share of all digital profits that Microsoft made off any Xbox it sold. This caused a lot of excitement because it was a new type of deal that could... Unfortunately, the deal was shrouded in a lot of mystery. There's no information on what percent cut that GameStop's going to get, so it's very hard to predict how much profit this is actually going to gain them. But it is quite exciting because it shows that these big tech giants, or at least Microsoft, is open to new types of agreement that could bring in long-term profit streams for GameStop and potentially transform their business model. Especially since games are now moving to their digital presence. Pretty much all money made on these new systems is going to be from digital in the long term anyway. This is actually especially important considering the shift to digital in the gaming world. less and less box games are being sold, more and more games are being sold digitally. So having a part of that revenue constantly coming to your company could be absolutely transformative. Now, why Microsoft did this, I'm not sure. Maybe Microsoft doesn't like the dominance that Amazon and other big retailers are going to have on selling consoles, or maybe it was simply an incentive for GameStop. When more information comes out about this, it'll be really interesting to see how it impacts the share price and also what assumptions we can make for GameStop going forward. So what are all the analysts currently valuing it at? Well, the high price target for analysts is about $22, median is about $12.50, and the low price target is like $2 or less. So that means the average is about $11, but it's trading at over $30. Now, if you know me, my opinion on online analysts is they're all garbage. These banks are using it to manipulate stocks for their own gain. What I would say is that most of the people who are bearish on this stock is they don't understand the potential for its online transformation. They don't believe that Ryan Cohen can transform the company. And really, its current valuation really depends on it really performing strongly in that sense and smoothly transitioning into a dominant online player. At its current valuation, I would say it's a bit overpriced for what it is, and it's really banking on future potential or that short squeeze. Now, if you're interested in those short-term short squeeze profits, go all in by all means. But speaking on the analysts, this theme of analysts having a delay between recognizing a shift in an industry is very interesting. And another stock to look at is BlackBerry. So BlackBerry is still strongly associated with the phones, but it's not really a hardware company anymore. BlackBerry is purely in the software business, and it isn't currently valued as a software business. So another stock to maybe take a look at is BlackBerry if you're interested in a high risk, high reward play. To conclude, do I think GameStop's a good buy? In the long term, I think GameStop is a very risky buy. You're really banking on that transformation. In the short term, the short squeeze, I think it's fairly unprecedented territory for online communities, groups of investors to force a short squeeze on institutions. If it works, I think it will create investing history. So maybe it's worth buying a few GameStop shares just to be part of that. Personally, I've bought a small portion of GameStop, but it's not a large hold of mine at all. And I'm sort of writing it off as very high risk money. All right, thanks for watching. Lots more content to come on this channel. So hit that subscribe button, like the video if you enjoyed it, and put any comments in the questions below.